sell this to a baby boomer because that is all they want. They don't want to walk upstairs to a second level. And that's what they were selling us the home on, was you're going to only have this for a couple of years. That's who's going to buy your house from you, which is fascinating.
That leads me to a whole different deal, because talking about mortgages, how mortgages, do you know like the amount of people who actually pay off a 30-year mortgage? Do you know what it was 20 years ago, and you know what it is today?
It's definitely lower today, for sure.
It's 1/20th of what it was.
Wow.
Basically, mortgages are just long-term leases. That's what they are.
But also, I mean, if you look at it, right, people are more mobile today too, right? Back in the day, you probably bought a home, you stayed there for like 50 years. I mean, look,
you know, when I had 4 jobs by the time I was 30, that was 30 years ago.
Yeah,
my parents thought I was crazy. Also, all my friends did. They were all on their first job still when I had my 4th.
Yeah.
Like it's a net, but if I tell people I had 4 jobs at 30, people are like, that's all? It's a different world now.
That's interesting.
Yeah, but I wonder, like, with that whole mortgage stat, like, I wonder if that has more to do with the fact that rates were so low that so many people refinanced. You know, extending out those mortgages is one of the reasons for that.
Right, but you're true.
Yeah.
But that doesn't mean you're not putting off the finish line.
Right.
You're still, you know, I mean, you got to remember, my parents, when they bought their home, I believe interest rates were like 14% on their 30-year.
Yeah.
Now, I mean, the cost basis of these homes were nothing on a relative basis, because it was, you know, if you made $50,000 a year, my dad was a UPS guy, right? So I think at the end of his career, he was making like 50 grand, but their home cost them $140,000.
It's wild.
Right?
Yeah.
Now people make 100 grand on a relative, like a UPS guy makes 100 grand, right? A UPS driver.
Yeah.
But in order for him to buy a home, let's call it in the tri-state area, you're looking at what, $600,000 as an entry point. So on a ratio, like, think about that, right? So what impact that actually has. I didn't mean to drag it in that direction. I'm just saying.
No, that's fine. It's fine. No, that's a good point, because the other thing is housing prices over the last couple of years have skyrocketed versus history, right? And a lot of that is supply and demand. So,
but also this is the first time. Usually, ownership and renting are inverse. Now they are correlated.
Meaning,
for the first time ever, we've had 5 years in a row where it costs more to rent or buy every year.
Right. And
usually
that's because of supply. Supply is a big problem.
100%.
Yeah.
It's a wild phenomenon. And I think that because they're correlated, unfortunately, and I'm not a doomsday guy, but I really think that is a recipe for a massively sick and painful correction.
It all is predicated on how much more they build, because right now building costs are extremely high, getting labor is extremely high, so they're actually not making up the difference. So until that actually changes, it could be in a tight housing market for a long time.
Plus, to your point, boomers are staying in their homes longer because
they can't afford to move.
Most of them have mortgages under 4%, so nobody wants to sell. So that's like part of the problem too, is none of the existing houses are going on the market.
But that relates back to what I was saying. That doesn't make any sense to me, because it kind of proves your point of like how can you be a boomer and not have paid off your mortgage already?
No one loves to spend more than baby boomers. They leveraged everything, their whole career. It's a shame Bob's not on today.
Right.
But no, that's the point. I think. Well, also, if you have a 2% mortgage, you're not going to rush to pay that off either, right? If you refinance that during the pandemic or whatever, like, why would you ever pay that off? I mean, you're getting 4% interest sitting in a money market fund.
Yeah, but and again, maybe I'm wrong, right? And I don't know when the phenomenon of ARMs really started. And I'm not saying it wasn't a vehicle or an option in the past, but like, I remember my first apartment I bought, and I did some, I do research always on everything. It's
an understatement. Yeah.
And I did some research, and like this was early 2000s, right? And I don't believe that I had an ARM option.
Well, that was a phenomenon during the Great Financial Crisis, because if you looked at the amount of floating mortgage rates then, it was like 40, 50%. It's like 10% today. Like almost 80, 90% of mortgages now are fixed. That's why when the Fed raised interest rates, it didn't have the big effect on the economy like it would have back in 2008.
Gotcha.
People didn't realize that. That it wasn't the same, because I think everyone learned their lesson. They're like, oh, This isn't good to have a floating rate. This is a problem. And I think, look, you had a point where you're like 2%,
So it's like
3%.
that. It's the stripper scene in The Big Short, where she's like, "What do you mean all of my mortgages being reset at one time?"
Which, funny enough, I had those conversations. Like, I remember talking to a waitress in Florida one time. This is like in 2007. She's
Notice
like, yeah.
it's always Florida.
Yeah, it's always Florida. Fair point. Yeah, she's like, I have like 15 properties. Like, wow, really? How? But that's when you kind of knew.
Yep.
It almost feels like maybe cryptocurrencies today.
Oh man.
Just saying.